following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there had a fun and exciting weekend. My name is Mark Longo, and I am your host for this jolly frolic.
That's Mark Press the Flesh Longo, is my understanding.
I did do a lot of flesh pressing, as it were, last week. Listeners may know that last week I was down at the old Options Industry Conference, OIC, in Savannah, Georgia. It's one of our big, if not the biggest shows for us every year, where we go down and set up kind of our own little conference within a conference. They set us up in a recording studio, and I miss the entire show, but on the flip side, I get to speak to one-on-ones just about everyone who's interested in the world of options. Brokers, exchanges, trading firm heads, you name it, vendors, anyone's interesting and relevant to options. They come by.
I think there's a big difference between relevant and interesting there, Mark.
Well, there's a little bit of both. Yeah, sometimes. I won't comment on anyone for fear of offending anyone. But we also are the exclusive audio partners for the conference. So if you're out there looking to listen to some of these panels, and we do get a ton of traction on these every year, then those will start going up on the Options Insider in the coming weeks as well. So stay tuned for that. In fact, I think the first panel session just went up this afternoon. So we'll be putting those out on the Options Insider as well as to our Options Insider radio feed in iTunes. So every year that stuff is huge. In fact, I just checked before I went down to the conference last week, and I think the number 8 and number 15 things in our top 20 downloads for that day were OIC 2010 panels. These things get a ton of traffic. The tail on these things is ridiculous. So if you're interested in options in any way, shape, or form, then I encourage you to check that out. And of course, I am not alone on this show, not by a long shot. I am joined by a rogues gallery of characters, starting off with Mr. Tim Navabi from Options Express. Mr. T-Nob, how are you doing this fine week?
I'm doing very good. Thank you very much for asking me, Mark. Appreciate it.
I missed you down in Savannah. We could have had a few nice cigars together.
Oh, yeah, that sounded great. Yeah, nothing new and exciting. Just, same old for right now.
Doing your normal lady killing?
Yeah, no, that's all right.
No, it's all right that you weren't doing. Yeah, we all know about you, Tim, Mr. Soft-spoken, absolute lady killer. It's terrible,
Someone's got to do it, right?
I know. Wow.
And of course,
ruin it for everybody.
That tinny voice is none other than the Seabass, a.k.a. the Greasy Meatball, a.k.a. the manager of the Mini Metals, Mr. Mark Sebastian from OptionPit.com. Mr. Sebastian, how was your weekend, sir?
I can't really complain. Can't complain at all. Just
but somehow you will anyway, I'm sure.
No, don't worry. on Saturday. We went out to some little party. It was a great time. We whip out the pack and play, and then my kid screams his head off for an hour and a half, and so we just left. So that would be the extent of my complaining. So good times had by all. How about you? How was your weekend?
I am enjoying your Skype images. That's gonna stick in my
head. For those of you that are listening and they're wondering what Skype images I'm sending, it's pictures of me with a whipped cream bra on.
Yes. Unfortunately, that is.
It's attractive.
Yes, and for all of our listeners who want to join our live audience via Skype, they will be treated to all this fun imagery as well. And then last, but certainly not least, the man from the mountains himself, good old Uncle Mike Tusoff from Know Your Options Inc. Uncle Mike, how was your weekend, sir?
Every day's a holiday, every meal's a feast. We had a great turnout for the blood drive out in St. Charles, and thank you for all of you that showed up, even though I don't think anyone from this show showed up. But nonetheless, thanks for coming, everybody.
You sound even more earthy and rich today. Did you get a new mic, a new headset or something over there?
Coming at you from Chicago today, actually.
Oh, maybe that's what it is.
So, but it's I have the Chicago mic on. Yeah, see, I have a different mic everywhere I go.
It sounds good. So the ladies are swooning as we speak.
Oh, the option trading groupies.
There we go. All right then, and with that little bit of banter out of the way, we shall roll right into the meat of the show. None other than the trading block.
The trading block.
And welcome to the Trading Block. This is where, as you might expect, we discuss what's been trading, what's been moving the market, as well as some of the interesting news and developments we're seeing throughout the marketplace. And there is no shortage of interesting things to talk about today. Before we do that, quick rundown of where we closed today. S&P closed down nearly 8.5 points. The Dow closed down almost 50 points. The NASDAQ closed down a whopping 46 today. A nice little move on the NASDAQ today. And good old VIX Cash closed at 1820, up 1.13 points. And a lot of things happening today. Of course, the old Treasury Department taking even more extraordinary steps to prevent defaulting on our debt. You'd think with news like that we might have sold off a little more, but apparently not. Of course, speaking of...
So long as we have bigger bombs than everybody else.
I guess.
Who's going to collect, you know?
Now, was that a Skype reference, or are you talking about real bombs?
I'm talking real bombs, baby.
Yeah, since you do mention Skype, of course, we didn't have a chance to talk about it last week, but there was the massive, ridiculous, some might say, acquisition of Skype by Microsoft, which obviously impacts us here on the show quite a bit. I'm waiting for the email from Microsoft saying you now need a professional license for Skype, and we will charge you some appalling licensing rate. But that aside, yeah, $8.7 billion. I think it works out to $15 per Skype user. The largest acquisition Microsoft has ever made, which is amazing to me that they haven't bought anything of this size in the past. And a lot of speculation that it was a defensive buy to keep it out of the hands of maybe Facebook and or Google. And so they just paid through the offer. And you know what's really interesting about this is eBay finally made money on the Skype deal through this. They sold it back to the original founders and a few other guys to just dump it off their books, but they kept an approximately 30% stake in it. And that 30% stake of this $8.7 billion deal works out to be a net winner on the over $1 billion they paid originally. So they finally figured out a way to make money on Skype, and that was to sell it to someone else who was even more foolish in their pricing.
Yeah, I mean, they paid way too much, but I can definitely see how Microsoft would want this and where it might make some sense, you know? I mean, Microsoft needs to get mobile, like they do. And this may be what can give them something to compete with all the different things coming from Apple and Google and even BlackBerry. So yeah, maybe. That would be, you know, like Skype could be the ultra super version of BlackBerry Messenger kind of type of idea, you know?
I mean, speaking of Messenger, Microsoft obviously has internal products that already do a lot of this, like Messenger.
That are wildly popular.
Actually, it doesn't seem like it's very popular, but Messenger actually has more users than Skype. And it's one of these things that's really popular overseas and with I think a certain less tech-nerdy demographic that use these things, but it has they have users, and now they're going to make Skype a division of Microsoft, which I'm sure we're going to start seeing Skype, ham-fistedly integrated into everything Microsoft does. A big Skype button, force Skype into this. So it will be interesting.
And I'll give Microsoft Bing. I actually like Bing. I know it sounds terrible, but I like Bing. Am I the only one that kind of enjoys using Bing for a? I'm a Chrome user, so I'm not using Bing all the time. But
yeah, it's not bad. I have to say it's been better than I expected. I think I do use it occasionally, usually on mobile devices that have some Bing apps on them and that sort of thing. Yeah, Microsoft closing today down about 24.5, down 50 cents. Obviously, this is not directly related to the Skype news. Still, yeah, and actually, that like Apple, they were sitting on a ton of cash anyway, so it wasn't like this was something they couldn't afford. Some of these cash levels, I think you can probably argue at Apple that they're getting to the cash level there too. They have to start doing something with it or start kicking it back to the shareholders, because what are they? They're sitting on $60 billion in cash. Unless they have some major acquisitions planned coming up, it's kind of hard to justify sitting on that much cash, I think.
Yeah. Well, they've got the iHeart coming out, right? Isn't that
the iHeart?
Yeah, isn't that the next thing?
I don't know what that is.
Oh, it's their next latest and greatest thing that's gonna change your life.
Oh, I see what you're saying. Just whatever they got rolling out, yeah.
Yeah, the iLeg, iAthletics. Mike, we're not gonna need Mike, we won't need football players like you anymore. We'll have iFootballs, iFootball, iTackle, and iCenter. Yeah. And it'll just be a mobile app that does all the NFL for us. So
I want my ITV.
Yeah, that is the only thing that they can't seem to get right. Because do you think it's just that the market's saturated too much for Apple to really differentiate itself, or is it that since they don't make the television that they're not going to be able to differentiate that?
Yeah, they don't control the whole food chain like they do with the other hardware devices, so they can't really control the experience. Plus, it's a weird device. It only streams. There's no hard drive on it. You can't buy a movie and have it on your device forever. It's just kind of streaming. I don't know still how that purely streaming audience, how big it is. Plus, it's kind of weird. I think you have to buy the stuff through iTunes first and then stream it to the device. I don't think you can do it directly on the device, which seems kind of like a kind of a bizarre step. But speaking, of course, of Apple, some interesting developments in Apple towards the weekend, actually, after we finished the last show. An article came out on Fortune.com. I believe it was actually their Fortune Tech website, which is, of course, where I go for all of my options news. And it got picked up. It's on CNN Money and a bunch of other places. And the title of this article was no bias there. The title of the article is How the Market in Apple Weeklies is Rigged. And the subtitle was, if you're looking for evidence of manipulation, Friday's close was picture perfect. And Mark, I know you read this article. Mike and Mr. Navabi, you guys have a chance to look this over as well?
I did.
Yeah, it just goes to prove that all market makers are evil, just like I've been told for years. It's all true. I finally found that out.
I love that this guy thinks it's the market makers rigging it. And I want you to know, I'm not denying that the Apple game is rigged. But it's not by market makers.
Exactly. That's kind of the problem with this. There's a number of different problems. The underlying premise is actually correct. Not that it's rigged, but that it does pin to strikes. That's kind of that's not a surprise to anyone who's traded options once in their life.
Yeah. The issue here is that the people that are rigging it are not the market makers. The market makers are long, not short.
Exactly. That is my favorite part of this. This is talking about weekly.
This guy's an idiot.
Retail.
No, I want everybody to know this guy's name. His name is because I don't remember his name. His name is Philip Elmer DeWitt. Philip Elmer DeWitt is a dimwit. Okay, he doesn't understand markets. He doesn't understand. He certainly doesn't understand options. He knows little to nothing about the mechanics of a trade, and he should just shut up before he gets himself in trouble because he's a fool, and somebody's going to have to lay the smackdown on him, and it's probably going to be me because I just did.
Well, one thing I don't understand about when you see articles like this, it makes it sound as if you're not allowed to sell options. You're only allowed to do one side of it. Based on what he's saying, it seemed to me like your
stocks go up. Sorry.
Yeah.
Sorry, didn't mean to interrupt. Back to you.
No, so I'm just saying, if it's that rigged and it's that easy to do, then why not just take the other side of the trade? Do the exact opposite of what he was describing doing if it's that rigged?
Yeah.
Yeah, there's a number of fundamental problems with this article. First, as Mark pointed out, the first thing that leapt to mind, aside from the amazingly biased title, is the fact that he's putting all this on the shoulders of market makers. It's kind of that old saw that market makers are these evil power brokers who have all this market power and manipulate the market to all these obscene degrees. Never mind the fact that the ranks of market makers have been decimated, and they're probably one of the weakest groups in the options business these days in terms of actual influence on how these things trade. But also the fact that these are weeklies he's talking about. And like I said, the vast majority of what we're seeing in terms of customer activity on weeklies is selling premium on these strikes. So the market makers are long. They're not short these strikes. So they're not jamming you to the strike to pin to make all these gobs of money on short premium. They're actually long gamma. And that's the thing that this author has not acknowledged or does not understand. And the phenomenon of long gamma means you have to scalp to survive and to break even. And so what these guys are doing is when they're long a strike, they're buying stock below the strike to hedge their short deltas they get as a result of being long gamma. And when the stock rallies back above the strike, they're selling those long deltas. That process is known as scalping, and that activity is what keeps the underlying pegged or pinned around that strike. And it's not a manipulation game. It's the way to survive being long premium, as these guys all are in these weeklies. I mean, I can't imagine any market making firm out there has any net short premium position in a weekly product right now. The paper flow is just too one-sided for that. And so this is a fundamental thing. He highlights a few trades that he says are extremely dubious and where the stock went up in one big gulp. And that probably is no doubt due to the fact that these guys like to hedge their gamma and in big chunks. And also that...
Well, yeah, I mean, that's the thing he's got to remember is, in a lot of ways, the market makers actually game it against themselves by trying to scalp their gamma. This used to be a big problem for me. Whenever I was long, I made it a point to try and figure out, is the rest of my crowd long? Okay? And the answer was most of the time yes.
Usually yes.
Yeah. And now, sometimes no. Sometimes one of my favorite things to do was try and buy when these guys were selling and vice versa. Because that worked.
I'm sure you were a very popular fellow in your crowd.
Oh yeah, no, I was like the guy that bets the "don't come" line at the craps table.
I could see that. I could see you doing that, actually.
So yeah, and add my personality to that, and it's just a recipe for not being popular. If everybody in the crowd, you've got if I've got 100 of the weeklies, and then everybody else in my pit has 100 of the weeklies going, well, if it's the day of expiration and Apple's trading $3.43 and I'm long some calls worth $3.40 and it is clearly not rallying, you know what I'm going to do? I'm going to unload and at that point it's probably like a 75 delta, 80 delta. I'm going to have to unload.
At least, yeah.
At least. I'm going to have to load at least 2,000 shares of stock. Well, you get me with 100, everyone else. There were typically 20,000 straddles short on Apple going into that weekly strike every week, okay? So that is the equivalent of 20,000 times 100. That's 2 million shares. Oh, that's your block. That could be your block right there of those big block trades going off on Friday. They probably have, between 500,000 and 1 million shares to dump because I'm sure these guys are going long. I doubt there is no way you could make money trading that Apple straddle.
Oh, you have to. You have to. You have to scalp.
Without scalping, and B, probably taking a bit of a delta position.
And knowing market makers, they are waiting until the last minute to try to squeeze out every last bit of gamma they can on these things. So they're not hedging, they're not hedging at 2.15. They're hedging right towards the end of the day, like this guy points out. And the other interesting thing about this article is he makes it sound like retail is somehow disenfranchised by this activity, when in fact retail are the ones who are short.
Yeah.
They're the ones who are 99.9% of the time selling these contracts. So they're making out like bandits that the thing holds to the strike. It's not a way to disenfranchise retail. Now, if it moved 10 handles at once and it blew through multiple strikes, then he might have an argument. But it's just interesting to see the points, the underlying premise that the stock pins is fine, but the way he termed it is completely backwards.
Right.
The suppositions he makes are actually the opposite of what he writes. The retail is actually doing well in this, and the market makers are having a hard time with this. I wanted to point this out just because this kind of stuff goes on all the time in very large publications like CNN Money and Fortune, and is completely unchallenged because it kind of meets this derivatives are evil type of mantra that exists to a great degree in a lot of mainstream publications out there. And every once in a while, I like to pull these things up. Maybe we need a whole new block called the Reporter Re-Education block.
The reporters have no idea what the heck they're talking. Well, I mean, it's like, hey, you know anything about business? No, but I got a degree in English. Great, you're hired. You know? And
unfortunately, that is all too often the case. In one quick little bit of their defense, they also do have 27 different beats that they have to cover that are completely unrelated, so they can't offer any insight, which is another reason why they shouldn't be writing inflammatory articles like this when they really don't understand what they're talking about. Go ahead, Mr. Tina.
Well, first of all, I just want to say that I think your listeners are very lucky that they got such a good explanation from two very people who are in the know, with regards to trading this and being in the pit. And I mean. I agree with you guys that, it's not the market maker. Now, the more that, you went on and explained sort of, how and why it isn't, a lot of the customers that I talk to probably won't be able to understand that. But I think that they can get a good picture kind of what, you guys just had talked about and, why this person is wrong. One of my explanations, though, that I give to customers when they say, boy, this is being manipulated or this is being pegged or, and they start to get angry or get loud or, start to feel bad for themselves, I don't know if I'm wrong here, but, if I'm playing a game or when I was playing a game in grade school at recess, if I thought that it was rigged or people were cheating, I didn't play. I mean, there's other options to trade. There's other, there's other markets. There's other stocks like Apple. I mean, there's other weekly options. And what kind of gets me is when people say, "Boy, this is rigged." Somebody's pegging this, and then they say, "Yeah, let me give you my order."
Yeah, take your ball and go home.
Yeah, I mean,
or take the other side of the trade if it's so rigged. Then if you know that it's being rigged and you know which way it's going to go, oh, this is rigged, it's got to go down. Why not take the other, do the opposite of what you think you were going to do that you were getting cheated upon?
Which in this case, they actually are doing that. They actually are short the premium, which he assumes the market makers are. So the retail guys are actually doing all right in this trade. That's kind of the irony of this article, is that his point is backwards.
Yes.
Right.
Yeah. And Tim, I mean, anecdotally here, you obviously see a lot of executions going across your desk. Am I completely incorrect here? I mean, I'm assuming that the bulk of the activity you see in the weeklies as well leans heavily towards the selling end of the spectrum, correct?
90%.
Exactly.
Yeah,
I had dinner the final night of the OIC conference, and I happened to have Larry McMillan at my table, and he had just won a Lifetime Achievement Award from the options industry, and he was talking the whole evening about how he can't believe how overpriced weeklies are, and these are just a fantastic premium selling vehicle. I get to hear anyone make many cogent arguments for size weekly buying unless it's right around an earnings event or something like that, where you need just some serious gamma, some serious leverage. Other than that, like you said, 99.9% of these trades are going up. Customers are short and market makers are long.
There is a net of about 4 hours on Thursday where it makes sense to be long.
Yeah.
My analysis, because what you get is
because the new ones are coming online, so the discrepancy is a little off.
No, yeah. When the new ones, when it's not when the new ones first come online. It's around 10:30 in the morning after the new ones have come online. So, and I'm talking Central Time, so 11:30 Eastern. So, to put things in the Eastern Time Zone, 9:30 the option's open. All right, you've got a big group of people that go in and just sell on the open. Okay, what happens is the market makers know that's coming, and they really, really drop their bid. All that premium trades, the market makers leave the thing kind of oversold until they start seeing, and they kind of leave that oversold until they get a little bit of buying, and then they'll run the price back up. So there's actually about 4 hours from about, I would say, 11:30 Eastern time till about 2:30, 3 o'clock Eastern time, just before they're moving their day forward to Friday, where I think you can get in and get some free gamma for about 4 or 5 hours.
Given the way these things are still, I think, so bizarrely priced, you're probably right. I think they still have yet to purely wrap their heads around it. And you're right. When they first list a weekly, it's like the gates are open, at the Kentucky Derby, and all the sellers just hit the freaking bids as soon as they come in.
Right, they do. And so market makers are doing that. And then there's about a 4 hour. There's a period right there where buying options makes a lot of sense because that spread gets bid back up, and you can actually scalp out of about 20 cents, I think.
That gets into kind of what we said before too about how these things get oversold going into weekends, and then the unaware person tries to hit bids going into a Friday thinking he's getting a weekend out of it, and the weekend's already gone, and it's a somewhat analogous tale to that. And I didn't mean to take up the whole trading block with this article, but I think it is important to sometimes when we see these things floating.
No, I mean that guy is just a clown.
I mean, this wasn't Joe's blog, this was CNN Money, this was Fortune Tech. This is places people will actually read this kind of stuff, and it needs to be countermanded. Before we move out of the trading block, real quick, Uncle Mike, you want to do a quick rundown of SLV action? Looks like the sell-off is continuing out there.
Yeah, it is. What we have today, I'm just looking at the charts of it. We're going down to around the levels that we were last Thursday. We didn't quite get to the lows that we got last Thursday, but we ended on our lows today. We ended kind of right around where we were then, so it'll be interesting to see how the market reacts tomorrow. Once again, this is why we like to hedge things. That's where we're at.
So what's our bathroom break indicator for today? How many are we talking? That gives us an indicator of how busy and how active the market was today.
Normal bathroom breaks today.
The Uncle Mike bathroom break index, the BBI.
The BBI, there we go.
So we have a low BBI today? Okay, so it wasn't too bad of a day then. Okay.
Average BBI today.
Average BBI. And before we roll out, Mr. Navabi, any other commodities you want to update?
Sure. On the commodity side here, cotton. Cotton was a big winner today. Cotton was up, corn was up, cotton up over 4%, corn over 2%, sugar was up close to 2%, natural gas was up about over 1.5%. Some of the big losers on the downside, as Mike said, silver, heating oil, crude oil, rough rice, coffee. So those were some of the big commodity movers. Copper, about even, not much of a change there.
All right, and then with that, we're going to close out this reporter re-education block, and we're going to roll right into the old odd block.
The odd block.
And welcome to the Odd Block. And once again, listeners, if you're not here for our live Skype audience, you're missing out on all the fun and all the silliness in between the segments. And here we are in the old Odd Block, where we discuss the interesting and or the unusual options activity that's lighting up the tape today. And we're starting off with Mr. Sebastian's favorite and one of Uncle Mike's largest holdings, of talking, of course, about Kong Zong Corp. Ticker Kong, K-O-N-G.
Kong Zong.
I think the owners of Kong feel a lot like Naomi Watts right now. The way that stock got traded.
So he's just he's juggling them. Is that what you're saying? And about to eat her, carrying them on the shoulder.
Exactly. Stock's down 27%.
Yeah.
I'm certain they're not happy about that free fall.
No.
Just like Naomi Watts looking down from the Empire State Building over Kong's lifeless, just dead corpse.
That analogy was actually somewhat apt. That was a good one. That wasn't one of your typical...
That's what I'm known for. That's what they call me, Mark. The apt analogy, Sebastian.
Yeah, it wasn't one of your typical meandering analogies we've come to be used to. All right, and Kong Zong, this is a Beijing-based wireless media company, whatever that means. As you can imagine, as Mr. Sebastian said, this was not exactly a bullish day for good old Kong. They closed at $5.48, down $2.12 or 28% on the day. This is the name that does about 238 contracts a day. So this is a really busy one. And they did almost 6,500 total today. As you can imagine, with the stock down 28%, not a lot of bears in the offing on this one. We saw the June 5 strike was the place to be today in Kong, the June 5 puts. We saw about 3,800 of these going up. An open interest of a whopping 0 on this strike prior to today. So all opening paper on the June 5 puts. The bulk of them were gobbled up, lifting offers for around 29 to 30 cents a piece, and these are already winners because these went out 45 cents at 55 cents. So these guys are already sitting pretty. This was probably one of the big trades on the day. We also saw a lot of activity on the May 5 puts out here in Kong Zong as well. Put call on this baby was about 6-1 puts versus calls on the day. And let's see what the other one. Yeah, the big trade was obviously the June 5 puts, with the May 5 puts coming in around 15-20 cents as well being purchased. This name last traded in this range, or even close to this, $4.71 back in October of 2009, and that's where these puts, that's where the stock has to drop to for these put buyers to make their money. Of course, they're doing all right now. That kind of puts the lie to the old expiration graph pricing of options. As you might imagine, the implied vol is up well over 100% in this name to 116. So yeah, a lot of, as you can term it, very unusual activity in a very unusual name. Good old Kong Zong. Not a lot of parties.
This is a total option block classic. We love the stocks under $6 going to 0 that have just tons of put volume.
We love them. It's fantastic. It's good stuff.
My only regret was that instead of 3,800 of the June 5s, it wasn't like 25,000.
Yeah, that would have been nice.
That would have been nice.
This just fits our purview here, as you can see.
Our MO, yeah.
Anyone can do IBM volume, but few dare to venture into the realm of Kong Zong.
Doesn't that sound like something made by Whammo?
It does. It sounds like a joke name. It does.
I know.
It's hard to believe that anyone would put that on a business card and go to a meeting and say, "Hi, I'm
sure in China they're like, what kind of name is Smithfield?
All right, and before we go down the rabbit hole of offending 1 billion Chinese, let's move to the next name on the odd block. Another little name you may not have heard of, Morgan Stanley.
I know this one.
Ticker symbol MS. They closed today $23.88, down a quarter. This is the name that does around 19,000 contracts a day. They did about 45,000 today. And this was the opposite story of Kong Zong, where we saw bulls active in the calls out here. A lot of activity on the June 26 strike. We saw 6,500 of those going up today. The bulk of them were lifting offers on these calls. This is the name that just a lot of bulls coming out to play in Morgan Stanley. The name has been down a little bit, but it's flirting with good support anyway, or believed to be good support at the 24 level on Morgan Stanley, which is probably why we're seeing people piling into these near-term upside calls right now. It's a cheap bullish spec that we're going to have a little bit of near-term rebound over the next few weeks on Morgan Stanley. They need the stock to rally about 7.5% by the end of the month for this to, of course, break even.
It makes sense to me. Unload your Citigroup, buy 2 shares of Morgan Stanley. I'm on board with that trade.
Yeah, you've been pumping this one in the media for quite a while now. Dive into Morgan Stanley with both hands, I believe.
Oh, that's my big thing. Morgan Stanley is the best. How could you? They can do no wrong, other than almost go bankrupt.
aside from that one little hiccup on the day. So yeah, to summarize, some near-term upside call buying in good old Morgan Stanley on the June 26 strikes. Or if you're liking these levels and you want a cheap way for some bullish upside, then that might be one way to go. And then, of course, wrapping it up on the old odd block, we have a name that's a first-timer on the odd block, I believe, and not in the Kong Zong Corp of type of first-timer, but an actual name people have heard of, IMAX. These are, of course, the big theater chain. They closed at $35.82, down 84 cents or 2.3% on the day. And this is a name that does about 1,700 contracts a day. They did over 8,000 today. And kind of like what we saw in Morgan Stanley, we saw an explosion of near-term call buyers coming up in IMAX. bulk of these went up in one little 10-minute clip this morning on the May 37 and the May 38 strike. More than 4,000 contracts are picked up just in that 10-minute span, the bulk of them opening buyers. These strikes close with about 4,600 total combined volume on those two strikes. And what makes these interesting is these are obviously weeklies at this point, so this is very near-term volume. And this is a name that averages only 1,200 contracts a day, roughly, so each one of these trades is well over the ADV for the entire name in a day. And overall, this is a serious upside or near-term upside spec on IMAX. These guys only have about 4 days left for this to pay off, and this is well over 6 times their average daily volume on this. So, yeah, someone's thinking near-term upside pop towards the end of the week in IMAX. They don't have any earnings, but there is to be some news that they're going to into a deal with the Cineplex Entertainment Group, going to provide some technology to them and upgrading some of their theaters. So apparently that is enough to drive this solidly near-term bullish activity in IMAX. So if you're active in these names and you're looking for some near-term bullish pop, or you think they take the opposite side of that and sell these if you think this is overdone with just 4 days to go. But yeah, near-term bulls flooding into IMAX. And that's going to do it for today's Odd Block, and we're going to roll right into the old Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is where Tim Navabi takes over the show, and the rest of the hosts and myself run for cover. So, Tim, have at it, sir.
All right. Thank you very much, Mark. Well, let me just go over a couple things here as far as what was moving here at OX. I'm going to start out with what were some of the top symbols that were traded here. The most active symbols traded at OX today were the SPY, then you have the SPX. You've got the SLV next after that, Apple, then the Qs, then the RUTs, and then something here I thought this was pretty interesting, MNX. That's the mini NASDAQ. So we got some mini indexes starting to trade here. Then Amazon, PCLN, and Baidu. Those I really took a couple orders on Amazon and Baidu myself. Some of the other things, as I mentioned earlier, as far as what was moving in the commodity markets, let me bring those back up here. Silver was pretty much the biggest loser right now on commodities, as well as heating oil and crude oil. Some of the news there that I was reading was that the flooding down south wasn't expected to make a big disruption with regards to transporting crude. So, the oil's flowing there. So maybe that's the reason why that was a little bit lower. As far as on the upside, we had cotton, corn, sugar, lumber, lean hogs, oats. So it seems like some of these commodities are starting to have some small green shoots again, that term. But so there's, we'll see.
Selling may go away, Tim.
All right.
Selling may go away.
Maybe in equities, but maybe they're moving money back towards the commodities. That's some of the news I had on cotton. Was some dry weather down in the south. So we've got some weather conditions here at work, which could be another reason why some of these are starting to firm up. And as far as our trade recommendation, from our analysts here, you can find that on our research center. It's over on the right-hand side, and that's the Espresso blog. They essentially had a wheat trade going on. they thought that KC wheat is what they were talking about here. KC wheat trading about $8.85. When they were writing this, the September 750 puts could be sold for around 12 cents. So again, that's more of a bullish trade there in commodities by selling puts on wheat and looking for those to expire worthless.
I love my KC wheat. I only buy bread that comes from KC wheat. Otherwise, it can't be allowed into my house.
I love it. Mm-hmm.
All right, Mr. T-Knob, thank you for that. Yeah. We should call your block. We should change it to the KC wheat block.
I like that.
Yeah, so
wheat
that's
and
it.
Cotton. I like it. All right, sir, and with that, we're going to close out the old Express block and roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is where we talk about what's on our horizons, what's caught our eye for the next few sessions. And there is a little bit of news coming up on the economic calendar, of course. We have housing starts. Mr. Sebastian, I know how excited you and some of your blogging buddies are by the old housing number these days.
Mm-hmm. Mm-hmm.
That's kind of, I think, in your.
Well, it's been a better, you remember Bill talk about this, but it's true. If you look, the market's not reacting to unemployment very much, or the employment figures at all. But it is bouncing off those housing starts because I think a lot of people think that that's where we'll find an actual turnaround is when the market actually stops. When the housing market stops falling, so will the American economy. That's kind of what everybody thinks. So at least
it's gonna be tough with nobody lending. I mean, real estate has a long way to go, in my opinion. I mean, it's still. Being the American that I am, I do hope the real estate market does recover, but I have to admit I am not of the bullish sector.
Well, the thing you've got to remember is we don't need the real estate. The American populace is going to grow itself into real estate, not even the American economy. Does that make sense? So every year we're adding more and more people that actually maybe need a house, and those people eventually will buy a house. So there is that. That is where we find the floor.
That's a very Malthusian view of housing, sir.
Well,
Malthusian. I like that.
That was my other nickname in college. Was Mark Malthusian Sebastian. I don't know if you knew that. I had a lot of nicknames in college.
You were a very nickname-friendly person, I think.
Yeah, well, I'm a polarizing figure in many ways.
Where'd you go to college to get all those nicknames?
The School of Nicknames, of course.
Yeah, no, I went to the School of Rock. Me and Jack Black. So.
And aside from housing starts, not too much exciting on the old earnings calendar. Of course, we have Dell coming up around tomorrow after the close, actually. And Dell, no longer the tech stalwart that it used to be, but still some interesting activity. They're trading around the 16 handle right now. Mr. Tuso, I know you like playing in Cisco. You play around in Dell at all?
Do not play with Dell. Do not play with Dell. And I'm sure you probably heard my rant on the show from last week of my Cisco dealings. But no, technology's tough right now. It's difficult. I'm just looking at XLK, and it's having a hard time making progress right now, it looks like. So what's interesting also, I'm just looking at XLK, that's the ETF that tracks the technology sector. 26 level looks like it's going to be pretty interesting. And I'm not a technical wizard by any means. I've never considered myself a technician, but it's sitting right at the 50-day moving average right now, and the 26 level appears to be somewhat of support. So with that, I think we're at an interesting crossroads right now in the technology world, I think.
Yeah, the only place where there's money right now in tech is if you've got some garbage social media platform and you're shopping for VC money out in San Fran. Then you can go grab $20, $30, $40 million right now. No business plan required. But if you actually have a business, then you're having a rough time finding customers right now.
Yeah.
And then of course we also have.
JCPenney's has earnings. Looks like that was this morning. Sorry.
I think this earnings cycle. Keep an eye on XRT. I think this jump in gas prices is not going to affect retail from this quarter, but next quarter it could certainly have it could have a real effect on the spring market. And if gas doesn't really fall, that back to school area is going to be terrible. Look out. So not that I know a lot about retail. So
God, are we already talking back to school? We haven't even started summer yet, and we're already talking back to school.
they plan 6 months ahead of time.
Oh yes, I know.
It's
just scary to hear that already.
Yeah.
We do have the FOMC minutes on Wednesday.
Now he does a news conference. That's a waste now. Don't you think? I mean.
Yeah. Oh, after their decision, right?
Yeah.
And of course, there was a development. We have been talking in the past about the old battle hither and yon for the who will own the NYSE, and it seemed like a foregone conclusion that the ICE NASDAQ deal would just never make it past the regulators. I mean, who would allow ICE and NASDAQ to buy NYSE? It would be the definition of a market centralized monopoly, and looks like the regulators didn't waste much time. They shot that one down this morning. So after all that banding about last week about who was going to buy who at that conference last week and who was suing who, it looks like the ICE NASDAQ deal fell through. And personally, I never really gave it much credence. I've seen those ICE guys before throw their hats into various arenas, and I've heard them even say at various events that it's a cheap way to get a lot of PR. And it certainly works pretty well for them. They spent a few $1 million on this. They spent a few $1 million on the CME deal that they interjected into a few years ago, and they got tons and tons of coverage off these things, and they get a lot more phone calls answered when they go around the block. Because not to say that their deal was disingenuous, but I think they had maybe a few ulterior motives to make it as well. Mm-hmm. And now that I've offended everyone over at ICE, what else, sir? Mr. Sebastian, how's your CBOP?
You know what? It's about as cheap as I've seen it up until the last couple of days. Now, since then, it's starting to pick up. So. There is a very important piece of around the block news that we didn't talk about. Donald Trump is not running for president.
Oh, is that official? Did he come out with that?
He did.
Mm-hmm.
So
I'm surprised the market didn't explode to the upside on that news.
Yeah. It would have been the biggest, bestest rally of all time. Let me tell you, I would have been the best, biggest, coolest, brightest president this nation would have ever had. Tallest, most hair.
Right.
So,
and with Sebastian's surprisingly decent impersonation of Donald Trump, all you need is the wig, and then you're good to go. We're gonna close out this Around the Block segment, and that's also going to do it for this episode of the Option Block. And I want to thank my usual cast of characters for coming on the show. But before we do get into the individual plugs, there is some interesting news to plug on the show front as well. We are in the planning stages of doing a live show, and that's going to come up in July 21st, right here in good old Chicago. So if you're in the Chicago area, then swing on by. We haven't nailed down a place yet, but it will be at an establishment that sells fine beverages of the adult variety, so Mr. Sebastian will feel at home. And it'll probably be somewhere downtown. We haven't nailed down the exact place yet, but
my understanding is that Grigas already challenged Navabi to a case race. That's what I heard.
Live. It'll be live in front of OIC compliance, or in front of OX compliance. It'll be
exactly. Well, those Schwab guys love to booze. I don't know if you knew that.
I did not.
Charles Schwab, his nickname was the Bottle. I don't know if you knew that.
And that's the hand of OX compliance cutting us off altogether. The Bottle.
That was his nickname in college.
Chuck the Bottle Schwab. So that is coming up on July 21st. So if you are in and around the Chicago area, or if you're nearby, you want to drive in, feel free. It will be a fun show. We'll have all kinds of stuff going on. Probably give away some.
You can hear all the horrible things we talk about in between segments.
You can hear all the horrible, horrible things. Maybe Sebastian will send out some of his fantastic pictures to everyone who's there live.
You go.
And of course, we'll take a bunch of listener questions live right there at the show. It should be pretty fun. So mark that down on your calendars, listeners. If you're going to be anywhere near Chicago on July 21st, and we want to see you. Swing on by. You can hoot, holler, yell, ask questions, do whatever you want. Should be a fun time. So mark that one down. And with that, Uncle Mike, what do you have coming up over at Know Your Options Inc., aside from the big live show, of course?
Well, we're taking a little bit of time off right now in terms of live events for the next couple of weeks. Come June, we'll be back to our Sunday night schedule, but just going to relax the next couple of weeks for the evening events and just continue the all-out focus on educating our current clients and working with what we have and just getting all the new reps up to speed and onward and upward.
And Mr. Sebastian, what is new and exciting over at OptionPit.com?
Hey, we got a free webinar, Adjusting Butterflies, on Wednesday. Go to OptionPit.com to register. And I just signed my paperwork to be a senior writer with TheStreet.com. I'm now going to be one of their featured 4 writers. So kind of exciting for me.
So before you were junior janitor?
Yeah, before I was considered. They have their all-stars and the bench. I was a bench. Now I'm an all-star. So it's good to know.
Is that why there's that star
John
on your
Carter.
cap?
Yeah.
And, of course, Mr. T-Nov, what live events do you have coming up over at OX?
Well, we do have an actual live event on the 21st of May in Columbus, Ohio, from 8 a.m. to 4. Some of the webinars that we have coming up here are we've got trading income strategies. That's on 518, 520, 525, 527. We have charting for new traders. That's on 524. And how to trade.
Call that wasting time with new traders.
How to trade 24-hour markets. That's on 524 as well.
I'm glad someone else feels the same way about charting that I do.
So, yeah, those are some of our events there.
All right, then that's going to do it for this episode of the Option Block. And before we go, I do want to remind our listeners that we do have all that great panel audio coming up on the Options Insider from the OIC 2011 conference, as well as all of our episodes of Options Insider Radio coming up from the conference as well. That's probably 40-odd, if not 50 hours of content coming out of that show. So if you're interested at all in options, we have something there for you. Surf on over to theoptionsinsider.com and you will find it, or you can surf for it, look for it in iTunes, just search for Options Insider Radio. And of course, if you have a question or a comment for the host, we didn't take any today because we were too busy re-educating the reporters, but we'll take your questions again on a future show. Just surf on over to theoptionsinsider.com/forum. You can send us to them via Twitter, twitter.com/options. You can send them to Mr. Sebastian. He'll give them to us on the show over. What's your handle again on Twitter?
At OptionPit.
At OptionPit. There we go. So send him DM Mr. Sebastian with the question. He'll bring it on the show. You can get Mr. Tusaw. What are you again, Mr. Tusaw, on Twitter?
No Options. KNOW Options.
KNOW Options. So send it to any one of us. It all ends up at the same place. And thanks again for listening, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.